Sean Roosen, CEO and Chairman of Osisko Development, listed on the NYSE under ODV and listed on the TSX under ODV, and also the founder of the Osisko Group, Osisko Mining, Osisko Gold Royalties, and Osisko Mining 2, and working today on our BC permitting projects and all the things that are to come for 2025.
Sean, good to see you, and welcome to London. What are you getting out of this trip to London?
A little more energy than I thought there might be here, and obviously off the back of the U.S. election, there's a lot of buzz, back in the financial sector. The market's picking a direction with this election sort of off the table. We saw a premium on the gold price coming into the election. I thought it might be back off a couple $100 after the election, but gold prices hung in. Copper prices have had a nice little move, and they're seeing some re-energized shareholders in the institutional space back at the table. We recently raised 92 million US, or about 130 million Canadian. So times are good.
So not everyone's rushing to Bitcoin then.
It'll be interesting to see, the confluence between what happens with the tokenization of assets like royalties and gold and mining stocks as those two worlds come together.
I think they will.
I'm involved in a couple of things where we're seeing that the tokenization, especially of gold, has already happened. Over $1 billion worth of gold has been tokenized into crypto. So we'll see those. The people in the crypto world need to be able to buy things that are tangible at some point. So that's that's a trade that is evolving, and I think the mining industry is pretty well adapted to be part of that real asset trade. So.
Right. So I think the companies at the moment seem to be getting reward back to mining proper. Producers obviously making out like bandits. They're huge improved margins from the beginning of the year. What a year. Near-term producers telling their stories like you guys. Going to start getting rewarded soon?
I believe so. We had pretty good response. We were oversubscribed on the deal that we went out with in November. That was a two-piece deal. It was a total of 92 million US. We probably were oversubscribed by probably close to 100%.
Right.
So there is demand out there for good names. Our calling card, of course, is we have the trifecta on the go right now, as I like to call it. We have a fresh permit. We just got it 11 days ago. We have over $140 million in the bank. And we have a gold deposit with 2 million ounces of reserves and another 3.3 million ounces of inferred with a permit on it. So we're in a sweet spot, a fairly small group of companies that are enjoying that, and we have a pretty good moment to capture some value. This mine will produce over 200,000 ounces a year when it comes online in a couple of years. And 200,000 ounce a year producers right now are trading around $2 billion. This company is trading about $300 million. So we have quite a bit of room to re-rate within that multiple, and all we have to do is the work that we're doing now, just keep doing the derisking and box checking on the mine build.
Right. Did you expect a better reaction once you got the permits? Because like 350 market.
Well, we had a pretty good reaction because we did the financing before the U.S. election.
Right.
So we didn't have access to that funding unless everybody sort of thought that we were moving along the value chain. But the gold price, was the tailwind on that financing. And, since then, the stock is above deal price, which, for financing of that size versus the size of the market cap of the company, I think we got pretty good support.
Okay, so where do you think people, investors specifically, view the risk here? Because you've got the money, you've got the permit, you've got a big production profile there, but the market cap's 350, share price hasn't kind of moved for 4 years. But surely,
we've probably got another 2 to 6 months of show me issues to deal with.
Okay, such as
the bulk sample, the reconciliation between what the predicted grade was from the surface drilling versus what we get from underground. We're 1,200 meters underground now. We'll probably shoot that bulk sample.
Where are we?
We're basically in the development of the second sill. There's a top sill and a bottom sill. So we're 1,200 meters into the underground. So we're actually in mine construction right now. I think that bulk sample goes a long way to helping everybody understand two things: the reconciliation between the drill indicated grade and also the met recovery from the ore sorter, which is the other show me part of the story. So we're going to be sending that sample over to Saskatchewan to a Tom Raw Center for Excellence in January, February. And we'll continue to do that. But our met work has been advancing quite nicely. We're doing an optimized feasibility study, which will also come out in Q1, which I think is another part of the show me story, is to see that we've been able to hold the capex. So we had about a 750 million Canadian or 550 million US dollar capex on this, which is relatively small considering the size of the prize here for a 200,000 ounce a year mine.
You've seen a lot of companies kind of adjust their model and say, well, maybe we'll start a bit small. It's a little bit less efficient, but the capex is more realistic at that point. You're saying, don't worry, we believe we can get this financed.
Well, we've taken quite a bit of risk off the table. We own a comminution circuit or a crushing and grinding circuit that we purchased from a project that didn't go forward. So we have sort of the internal organs of the mill are locked down, and they're sitting in about an hour and a half away from the site as we speak. We've been mining here in the past, so we have an existing mill at the QR it's a smaller mill, about 800 to 1,000 ton a day capacity. So we ran that and produced about 50,000 ounces over there in the past. So that's fully permitted and operational if required. We're focused on building a new mill at the site as well.
That's a backup, not a primary.
So that's an insurance policy in our back pocket at this point in time. If we want to use that mill, we can. And then on site, we have about $150 million worth of infrastructure development there between the underground development that's already in, water treatment plants that are on site, over 200 beds for the camp and construction. We own about $5 million worth of the residential infrastructure, houses and other buildings in town. So we're set up to go mining already, and we're on pavement and we're on grid power. So we got our big mines and large mines certificate for both construction and operating, which was the big one. We have a principal support agreement in place with Lataco Dane and with Williams Lake, our two principal First Nations groups that we're working there. We have a third one that we're still continuing to work with. But all in all, this project has gone forward in a way that I thought was logical. To get through the permitting process. We're in the permitting process for 4 years and 8 months, and a shout out to the BC government. They got it done in under 5 years, which was kind of the parameters, and far shorter than the average 14-year span that's in the industry right now. So we were the first ones through that new process in BC, which is, they call it sort of the single wicket process, which we did in the A certificate first, which we received in 2023. And then the mining permit was less than a year, about a year after that. And this is the full operating permit with everything. There's a couple of more things that are evolving. The power line permit's about 6 months ahead of schedule so far. But all in all, everything we need to build this mine we have in hand. Everything we need to achieve project financing is in hand. And I'd say if we use the American baseball analogy, we're somewhere between second and third base on everything complete in terms of the project and the project financing. So,
why isn't it sold yet?
We have a 24% share position sitting with Osisko Royalties.
Yeah.
They've been quite supportive and agreed to a lockup agreement in this last financing.
Yep.
This is a very important story for Osisko Royalties as well. It's a 5% royalty that goes to OR, so at 200,000 ounces a year. This will be one of the more important gold royalties to come to bear in the next 24, 36 months. My belief is that this is a mining camp. We've only gone down to 350 meters with this resource and reserve by drilling from surface. We've drilled down to 1,000 meters. We know it goes down that far. We have this thing over 4.4 kilometers of strike length. We have it down to 1,000 meters, but we only did enough drilling to qualify the first 350.
Right.
So we've been averaging between 14 and 22,000 ounces per vertical meter. So right now, if we know it goes down to 1,000, so we need to do some more drilling, and we're going to do some characterization drilling to prove that it goes down past 1,000 here in Q1, Q2, and that opens this up to be something that we can scale and go from the 5,000 tons a day.
Is that you telling me we're not selling this? We're going to operate this. We think the size of the prize, there's more to come.
Matt, I never set out to sell a company.
Yeah.
I set out to build and operate.
You sold loads of companies.
I know, but it happens
really
not.
good
It doesn't happen because we build them. We build them like we're going to own them and operate them forever. And that is why that the last company was Osisko Mining 2, went for $2.16 billion. Osisko Royalty is still around. It's $5.3 billion. I started that at $500 million in 2014. And then Osisko Mining 1, we started that at a $500,000 market cap, and we sold it in 2014 for for 4.1 billion, but out of that, we built the platform.
Yeah.
We also have Bob Wares is running Osisko Metals now with Gaspé Copper, a big copper porphyry system in eastern Quebec.
Yeah.
The Proserpine in the north. But then we have a few other smaller companies that we've incubated along the way in our our accelerator incubation model. So we always look for top quality projects. In my view for shareholders is the Osisko Group has been pretty successful. We've always identified good projects. We've always had good access to capital, and we've always executed our projects to the end. And sometimes they get sold, and Osisko Royalties is still fourth largest royalty company in the world, which everybody said you guys are mine builders and operators. You won't be able to build a royalty company. We did that pretty well.
Yeah. But has the formula changed over the years, right? Because I'm looking at the markets now. People are trying to draw parallels to different points in the past. But we've never seen gold where it is today. The rewards are high if you get into production. Margins are good again.
Yeah.
Right? So do you play it differently?
Well, I never tried to sell Canadian Malartic. Canadian Malartic made 720,000 ounces in 2015. The year they sold it. When we built it, it was a very controversial project at the time because it was huge open pit, 55,000 ton a day processing, 300,000 tons a day of mining, and producing 700,000 plus ounces a year. When we sold that company, it was net debt zero, and we had made the discovery on Odyssey, which is now plus 16 million ounces. So if you had that company, just that asset today, market cap on that would be somewhere between 15 and 20 billion. We got pushed into a hostile in that case by Gold Corp. We ended up selling to Agnico and Yamana. We started out at a $2.2 billion bid, and we ended up at 4.1 billion total settle. So our formula is always the same. I think we're known as good jockeys, but we never show up to the race without a good horse. So we've always focused on asset quality, and then the unwinding of the risk factors around that asset. Barkerville is a case in point. It's been a mining area since 1867 or 1858. Nobody really did the science there to figure out what it was and how it went together. We got involved in 2016. We had the aha moment after we figured out the geological model around 2019. We drilled 800,000 meters of drilling, and we confirmed that there was 2 million ounces of reserves, another 3.3 million ounces of inferred. We said, right, it's BC. We need to get the permit underway. And we went into the permitting cycle right away because we thought that getting the permit was the biggest de-risking and value add for shareholders. We've achieved that, last 2 weeks ago. The job for the next quarter is, finish optimized feasibility, get the bulk sample done, reconcile the grade and the ore sorter met work. And we've seen really good work on the met in terms of both increased recovery of the gravity circuit and increased concentrate levels in the flotation circuit. So this project has advanced very well. Now that we're underground and we're in the rock, we got a chance to see if we're going to get positive reconciliation from the drill model or not. It's my hope that we will. We're quite conservative when we model things.
Right.
So we'll see where we get.
Remind me, he did say, what's the timing again in terms of trying to understand the optimized feasibility will give us a sense of the margin. Underground has...
The optimized feasibility is going to mostly play around the fact that we're probably going to ship a concentrate directly from the flotation. Okay. We had 28 grams a ton concentrate in the 2023 feasibility, so it's not a very old feasibility study. So the optimization is not a big jump, but we have increased met knowledge to the positive, very positive.
Okay.
So we'll get a higher component in our gravity circuit, which increases cash flow and overall recoveries.
Yeah.
And the recoveries that we had in the 2023 were around 92 to 94. We should be in that zone.
Okay.
CapEx, we don't see a huge difference because we were able to lock down a lot of those costs back then by acquiring the equipment that's on site now. Okay. The execution of the underground has gone better than we thought because we didn't really know what the development costs would be for ground support and things. We ran the road header, which was the other piece of technology that we used, which allows us to do underground tunneling just with electric energy, without drill blasts, and then we don't have to deal with ammonium nitrate fuel oil contact water. So we've done 600 meters with that machine. It's a joint venture with Sandvik.
Yeah.
Magical machine. It does 2.5 meters by itself. and then you push the button, you move forward, and you do it again.
Yeah, that's impressive.
And so that technology, there was a lot of questions around whether that would work or not. It reduced our costs about $1,000 a meter for development, out of a sort of a $5,000 to $7,000 cost per meter of underground development. So very significant, and then also it increases safety and a bunch of other things. Second thing was the quality of the rock conditions. When we got underground, we're seeing really good right now development within the ore body where we were doing long holing. We were afraid that there might be some unknown rock conditions in there, but it's been very good. And the miners are making sort of 7 to 10 meters a day right now per heading, which is far superior to what we thought was going to be 4 to 5.
Okay.
So all those things are ticking off and going very well.
Right. Okay. So lots of things to look out for, and my thing is we'll start seeing what you get rewarded for by the market, moving towards that kind of FED and FID moment down the line. Let's jump down to Utah.
Sure.
Tintic, okay. So again, maybe explain the project.
Well, before the elections, Utah was the #1 rated jurisdiction in the Fraser Institute for mining investment. Now it's probably 1++. So we're located just outside of Provo, Utah, in a project called Tintic, which is a historic mining camp operated by Kennecott since the mid-1800s. There are 23 historic producers on this property. This is a property that came out of our Big Deep Science projects back in 2010. We were partnered up with Dick Silito and my senior guys, Terry Harbert and Chris Loader, Ruben Padilla. We went and we generated what we thought was going to be the next generation of copper porphyry assets, and we tried to own them since. This was our top pick for North America. We managed to own it a year and a half ago. We've got in there, we drilled a couple of holes in the North Lithocap. Now we're drilling in the South Lithocap. The drill is on site. We're waiting for drillers. So that could be a very exciting moment in sports history.
Yeah.
So that target has never been drilled before. When I first got the project, I was like, why did nobody drill this? Then we drilled it. We found out there's about 3,000 feet of quartzites sitting on top of this target. It's expensive drilling to get through it, but we figured it out. We have
good grades, right?
This has not been discovered yet. It's still at depth, and this is what Robert Friedland's Ivanhoe Electric was looking for on our southwest border, and what Freeport is looking for on the southern border. We're 40 miles south of Bingham, which is the largest porphyry copper system in western U.S., and it's produced some 22 million ounces of gold and quite a bit of silver and copper, and is, I think, the deepest pit in North America. So we're right in the same age rocks, same signature, same MO, same chemistry, same age group, and we're 40 miles south of Bingham, which everybody forgets that Salt Lake only exists because of the Bingham mine. So that's a pretty exciting piece. There are 18 CRD mines, silver, lead, zinc mines that were relatively shallow in the first 1,300 feet that were mined out, and then it went underneath the Ophir Shale. So we're going to be doing some of the exploration as they follow those CRDs under there. There are 5 historic gold mines on this site. We've got a ramp into the first one, Trixie. We have a high-grade deposit there, a small one that we've delineated, but we think there's many more of these pods in there. There's 27 kilometers of historic high-grade underground targets, and this mine stopped at about 350 meters or 1,300 feet because it hit water. And the mine manager's job was to supply flux to the actual smelter in Salt Lake City at Bingham, not to be a gold mine. So a lot of these things, like what we saw in this high-grade pod, are remnant are left there because they didn't have good quartz in them.
Right.
So those are the first targets. They're sort of like, if you will, chips in the chocolate chip cookie.
How much are you going to throw that next year?
It's a relatively modest budget this year, $3 million in the first pass. We'll drill a couple holes into the porphyry target, a couple holes into the CRD, and we've got a heap leach pad built there that we're going to put that other deposit on. We're going to start working on that probably as soon as the snow lights up in the spring.
Okay. So it really is all about Cariboo, but let's still want with
we got a lottery ticket. If we hit on that big porphyry, I will call you from the Four Seasons.
I bet. I bet. And let's also then keep heading south. Let's head to Mexico. Obviously, new president.
So Mexico is about a 300,000 to 500,000 ounce oxide deposit that we had built a heap leach pad for. And we've got a 15,000 ton a day plant on site when the Mexican government put a moratorium on open pits We're re-examining the pit permitting there as we speak with the new regime. And obviously with Trump in power, we're going to see what the effect of that is on Mexican mining policy. We are quite optimistic about Mexico right now, but that's a wait and see project, so it's kind of on standby.
Okay. So takeaway from this is it's all about Cariboo. That's where the most of the effort, money, etc., is going to go. And 2025 sees some big decisions needing to be made.
So I mean, the leg one here is to get this 200,000 ounce a year mine built at 5,000 tons a day. While confirming that we have the ability to go to 10 or 15 or maybe 20,000 tons a day within that region, within that footprint. If we were to get to 15,000 tons a day, we would be in big mine country at 500,000 ounces a year plus. So this is the reason I'm still involved with this. It's not a 2 million ounce deposit. This is a very significant deposit with a lot of upside. Otherwise, I would be doing something else. But I believe that this deposit has the ability to be quite significant in the world. We've been to the Super Bowl of mining a couple times. Obviously, Canadian Malartic was Canada's largest gold mine, still the 9th largest gold mine in the world. So we know what success looks like, and we're focused on the bigger projects where we can have the big win, and where we can deliver significant upside. For shareholders, the way that we think about things, if we look at benchmarking right now, 200,000 ounce a year mine of the quality that we're trying to build right now, we see similar companies like Wesdome that float around $1.8 to $2.2 billion at 300,000, 400, 500,000. You see things like Alamos benchmarking at 500,000 ounces a year is about $10 billion company. So those are the things that we're trying to achieve and stay realistic about what we can do for shareholders. And if we are going to do this, will we be able to get a significant multiple for shareholders? And that's the game that I play.
Talk to me about that equation, because I was going to finish there, but you brought it up, and it's important that we make money when the share price goes up. Those are the multiples you're talking about, right? But you're also in this kind of valley of death sort of moment where you're saying, right, we're about to raise a bunch of money to build quite a big mining operation here, right? So are we getting in early to avoid disappointment later? Why will the share price move?
Well, I think that the scarcity value of this asset's gone up significantly.
Right.
If you look at the amount of M&A trade that's gone on in the last 18 months, a lot of the Newmont assets have sold. Windfall was, the big one, which was us. We drilled 2.2 million meters into that one. We sold it for $2 billion. We're pretty up to speed on what's going on in the M&A space, and we know the value of these assets. On a bad day, this should be at least a double on an M&A situation. We're not looking to sell the company at this point in time. I think that, this is, I wouldn't bother building it if I thought it was just going to be a couple million ounces. I would say, let's pass it on to somebody else and make it part of a portfolio. But I think at the end of the day, we have the ability, if we look at depth here, the first 4.4 kilometers, relatively, low cost, we can add significant ounces. It's probably around $20-30 million per million ounces just to keep adding at depth. And we can do that all the way down to 1,500 meters probably. That's got to be drill proven and all the disclaimers that come with that speculative statement. But that's the size of the prize that we're after. And I think that we have the ability to be a good mid-tier producer with this. We know what that looks like, and we know that the shareholders get paid when we get into that territory.
Good, man. Good to see you, and appreciate that. Exciting year for you next year.
Yeah.
Well, this year wasn't too
overnight success in 9 years.
Well done. How do you do it?